Okay, let's go ahead and get started. Art, Curtis, you ready?
Ready when you are.
Let's do it.
That's great.
All right. Well, good afternoon to some, good morning to others, and thank you for joining our webinar today. I'm Rodney Williams, and I'm the CFO for Converge, and I also serve as plan administrator for the Converge Retirement Plans. We're joined today by Art Tennille, Director of Retirement Solutions at Guidestone, and Curtis Farmer, Senior Relationship Development Manager with Guidestone as well. They will be providing the valuable insights into the topic of ministerial housing allowance. In 2024, we engaged Guidestone to handle the day-to-day administration of our retirement plans. They have proven to be tremendous partners and excellent subject matter experts, offering us resources and reference materials on relevant topics, ministerial housing allowance being one of those. As my gray hair might suggest, I've been in the financial arena for many, many years. I started as a CPA and have been knowledgeable of personal and business finance for my entire career. But it wasn't until I came to Converge 5 years ago that I heard about ministers' housing allowance. Candidly speaking, when it was explained to me, I thought this is too good to be true. There must be a catch. After doing some further investigation, I was pleasantly shocked to find that there was no catch if you qualify. I don't qualify, but I'm constantly encouraging my colleagues, pastors, global workers, and others that do qualify to take advantage of this wonderful opportunity. So for those of you that may be less familiar with the topic, hopefully today's webinar will provide you the knowledge and direction you need to take advantage of this benefit. And for the rest of you, hopefully you can learn something too. And now, without further delay, I will turn the presentation over to Art Tennille. Take it away, Art.
Very good, Rodney. Thank you. It is so great for Curtis and I both to be with y'all today. And Rodney mentioned gray hair. If you look around, there's three of us that have quite a bit of that today. And I don't know, is that a crown of wisdom? What is it? But anyway, we're there in life, aren't we? And so we need to lean into that. But yes, this topic of ministers' housing allowance is a really, really important topic to ministers, both now during our years of ministry and later in that season of life when the Lord calls us to something else and we begin to take our retirement distributions from the Converge Retirement Plan. So it's a very fitting topic that we speak to today. So I'll walk through that here over the next few minutes, and then I'll hand it back over to Rodney, and we'll switch gears a little bit and talk a little bit about the Converge Retirement Plan as well. But this benefit of ministers' housing, it is truly a great value to ministers, and something that we all need to be sure that we understand and that we use it within its limits as wisely as possible, because it is a key pillar in our financial planning. So let's dive right in. What we're going to talk through today over the next few minutes is what is it? So the definition of it, who is eligible for it? How do we apply it? Are there limits? Yes, there are. And what are those limits? And then we hope to provide you some resources so that you can walk away at the end. And by the way, I think Lloyda is, after the webinar, going to be able to send a follow-up email that has a link to this Ministerial Resource Center that you see here, as well as a Q&A document on housing allowance that's going to speak to the topics that we talked about today on the webinar. So you'll have some follow-up information that I think will be very, very helpful to you. With that said, let's dive right into the definition of housing allowance. So what is it? The housing allowance at its core, it's an income exclusion. It's not a deduction, it's an income exclusion, and it's found in that section 107 of the Internal Revenue Code, in case you just want to go look that up. But the key point here is it's not a deduction, meaning that those folks who also itemize may be able to claim a housing allowance and itemize some things like taxes and mortgage interest. So that's an amazing benefit there as well. So it's an income exclusion. It lowers that income. When we are actively employed, as many of you may be today, a minister for tax purposes can exclude some or all of that ministerial income. But as I hinted at a minute ago, when we're retired, and this is something a lot of ministers don't realize or have forgotten over the decades of service, a minister may continue to exclude some or all of their retirement income as a housing allowance as they make withdrawals. So you think you've been saving all these years in the Converge Retirement Plan, and you get over here to retirement and you're ready to begin withdrawing to do the thing that the Lord's called you to do in retirement. As you make those withdrawals, Guidestone sort of takes that baton on housing allowance from your church and allows you to claim that on your withdrawals. So that's a beautiful thing and something you'll want to be aware of. So that's what it is. So who's eligible for the housing allowance? Probably understood, but let's not assume here. So to be eligible, a person has to be a minister for tax purposes, meaning that it's not just because the word minister is in your title or it's not what your title is at the church. That's not what the IRS looks at. They're going to look at basically the 5 questions that you see on the screen. And so minister for tax purposes generally needs to be able to answer yes to the majority of those 5 questions. So is the person ordained or licensed or commissioned? Does this person administer ordinances like baptism, the Lord's Supper, communion? Does the person conduct religious worship? Does that person direct or manage organizational activity in the church? And is that person considered to be a religious leader by the church? Notice it doesn't say you have to answer all 5 questions. It's a majority of those 5 questions. And so IRS publication 517 can give us some more detail on that, but those are the 5 questions that determine eligibility for who is a minister for tax purposes. And that person is then eligible for housing allowance. Not about titles, not about roles, but exactly that. So a minister then has this unusual place in life of a dual tax status. And I know most of you know that, but if you haven't thought about it in a while, a minister is an employee for federal taxes. So a minister files tax returns as an employee using a W-2, right? So the minister is an employee. But that same person, that same minister is self-employed for Social Security purposes, for SECA taxes. So for federal taxes, if I'm a minister, I'm an employee, I'm an employee. If I'm a minister, I am self-employed for Social Security purposes. So that's an unusual thing, and you can read more about that at that link as well. So dual tax status. So let's think about this for a minute. I'll go through the example on the left, thinking about eligibility here. So let's say we have a pastor with a $45,000 income, and he and the church designate $20,000 as a housing allowance. So if that's the case, then the pastor's probably going to save about $3,200 in federal taxes due to that housing allowance, assuming a 16% tax bracket, right? That's 16% on the taxable income there. That $20,000 that's no longer taxed. But we got to keep in mind here that the pastor still pays 15.3% SECA on the entire amount of that $45,000 salary, which is about $3,500 more in Social Security tax than the average FICA employee. Does that make sense? So here's the thinking there. That's a little bit more of a burden. So I'm saving money on federal, but I've got more SECA to pay. So this is not on the slide, but many churches, not all churches, but many churches try to step up and provide some sort of Social Security offset, some sort of extra compensation to help make up that difference. And if your church doesn't do that, you would not be, necessarily out of line and going and saying, hey, I understand that this is a thing out there that churches try to offset that. So think about this. If that same $45,000 person was an administrative employee or a maintenance employee at the church would be paying half of that Social Security taxes, so 7.65%. They would be paying that on behalf of that administrative or maintenance employee. Yet the brother of that maintenance person is a minister and has to pay SECA, and the church is not paying that. The minister is paying that, and so that person has an extra burden. So that is why some churches will come on board with an offset. Sometimes maybe not all the way up to the 7.65%, perhaps 3% or 4%, or we see 5% quite a bit, because the minister is getting that benefit of the federal reduction in taxes. So a church might feel like they don't need to go all the way to 7.65%, and that's probably true in most cases. So perhaps it's a 5% offset, but that is very common out there, and it's something that could be considered. So that's a takeaway potentially to talk about with your church leadership if that's not happening at your church. So how do we apply this housing allowance? What all has to happen in the background? Let's take a few minutes on that. So let's think about the church, the organization first. So what does the church need to be doing? Well, the church needs to be measuring and evaluating the request that comes in from the minister, making sure it's reasonable and within eligible limits. It's just sort of a protection for the minister. There's no written rules on that exactly, but just a reasonable request. The church needs to ensure that that designation is done annually. And it's not ever forgotten. So it's always on the agenda for the coming year, whether that's the personnel team or the finance team or whoever that is. And a good practice could be in the wording of that church agenda item would potentially be to make it an evergreen item so that unless changed in the future, so if the church ever forgets the following year, they're covered for multiple years in a row, at least at that same amount. So some churches will do that sort of evergreen and then change it as necessary. But the best practice every year, have it on the agenda of the personnel team or in the business meeting toward the end of the year and designate it. And that last bullet there reminds us it's got to be designated in advance and in writing before the minister receives the salary. So the IRS would say, that designation of a housing allowance must be prospective and it can't look backward. And so if we fail to do that in December for the coming year and we don't get around to it until March, well, then only those payments made to the minister from that point forward can be designated as a housing allowance. We can't do a look back on that according to the IRS. So that's a very important part, annually and in writing in advance. The church could consider these things as well. If you're at a church and you're receiving income, you get a W-2. So on box 14, churches can report the housing allowance there. That notation, as you see there in the middle, is optional. It's not required, but it is a helpful practice. It helps the minister remember what was there, and the IRS has that there as well. And then when the minister provides that, the church can often provides their housing allowance request once it's approved by the church. It's a good practice for the church to pass that back to the minister as approved, and then the minister could have that with his W-2 as he keeps his records when filing for taxes in case there were ever some audit and he needed to prove that. So, keeping those expenses, which we'll talk about in just a minute, is super important, but this is the documentation from the church. So that's basically the things that the church needs to be aware of. Moving to the minister needs to understand and follow the eligibility and the limits. So we've talked about eligibility. In a moment, we'll talk about limits. The minister needs to submit that estimate to the church in advance, as we said. And very, very important, it's tedious. And goodness, it's hard sometimes, right, to keep a file with all these receipts from Home Depot and the tax bill and all these things, but we've got to keep those receipts. We've got to keep them just in case there is ever an audit. It's not the church's responsibility to prove this. It's the minister's responsibility because they're self-employed here. And so the minister must keep that. And then report and pay taxes on the correct amount. And that's obvious and goes without saying. So that's the minister's role there. So what are some examples of expenses? If you haven't looked at the list in a while or thought about it, or if this is new to you, here are the kinds of things that do apply to the housing allowance. If a minister is buying a home, the down payment on a home applies up to the limits, and we can talk about that. You may have questions about that. Mortgage payments, principal and interest, rent, all those things go toward housing allowance. Real estate taxes, Sometimes those are big numbers, right? And they certainly do apply toward minister's housing allowance. Property insurance, utilities for the home, furnishings, appliances, repairs, remodeling the kitchen, the bathroom, those kind of things. That applies in those years when you do those. Yard maintenance, pest control, and then HOA dues. HOA dues. Those are some of the most common examples there. We get questions a lot from ministers who have paid off their homes or are considering paying off their homes. They say, I guess my housing allowance goes away when my home's paid off. And the answer is probably not, because most of us are going to continue to have expenses for our homes, even if the house is paid off, right? You look at that list, and just because the mortgage payment goes away doesn't mean that you don't owe taxes, right? Doesn't mean that you're not going to have insurance. You'll always have those other things as well if you own your home. So theoretically speaking, the minister would continue to have housing expenses that could be claimed as housing allowance all the way until that minister passes away, even if the home is paid off. All right, moving right along here to the limits. What are the limits that I can claim? How much can I claim up to? And so we'll break this down into 3 different scenarios here. And hopefully these scenarios will hit on everybody on the call here. We've got ministers who live rent-free in a parsonage. Not as common today, but maybe a few of you are still doing that. Ministers who rent their homes, or ministers who own their homes. So those are the 3 scenarios that we'll walk through here. The first one is a minister who lives rent-free in the church-owned parsonage that the church is providing for the minister. So in that case, the church determines and approves the fair market rental value of that home, furnished including utilities, and they report that amount to the pastor. The church could pay utilities and include that amount in what's reported, but that's that income to the pastor. But here we go. If the pastor has housing expenses that are not paid directly by the church, like the utilities, he could request a portion of his salary to be designated as housing allowance. And then that value would be exempt from the federal and the state taxes, but still be, of course, subject to SECA taxes. So to recap there, the minister who lives rent-free in the parsonage can exclude the lesser of these 2 amounts, the amount that the church designates in advance, or the actual housing expenses that are not paid by the church. That, as we said a moment ago, the utilities, the furnishings, the repairs, the improvements, anything that the minister pays for himself. That is what he could claim as a housing allowance. And it's always the lesser of the 2. So it's important to make sure we designate aggressively enough so that we don't fail the test of that one being the lesser of the 2 and have to leave some expenses on the table that we can't claim as housing. So that's the parsonage. Same idea applies here to the next one, renters. So if you are renting your home, then you can exclude the lesser of, again, the housing allowance amount designated in advance by the church, or the actual expenses. So what would a renter be paying? Well, obviously the rent, the renter's insurance, and then those same things like utilities, furnishings, repairs, improvements, and so forth. The lesser of those 2 is what can be claimed when I'm filing my taxes next year for the current year. And then the last scenario that probably applies to many of you listening and walking with us here today is ministers who own their homes. So they can exclude the lesser of 3 different amounts, right? So the first one, we could all just sing it together right here. We all know it. The amount designated in advance and in writing by the church, or the actual expenses. In this case, what would the expenses be? Probably a mortgage, probably utilities, property taxes, insurance, furnishings, repairs, improvements, those types of things. So the actual expenses, that's the point. Or, and here's the new item here, the fair rental value of the home furnished, including utilities. So I could have a designated amount high, really high, and I could have high expenses. But if the lesser item here is the fair rental value, what can my home bring on the market if it furnished and with utilities provided? If that number happens to be lower than those other 2, then that's what has to be claimed. And so I'll back up for just a moment to when we were looking at the list there. Remember, down payment of a home was on that list. And so often that can be a really big chunk of money in a year, right? If a minister buys their home. And so yes, the down payment is eligible for housing allowance, but it's this third bullet here that will oftentimes catch us on that one. And so it may be that the minister can't claim the entire down payment. It just depends on how the fair rental value of the home, furnished including utilities, comes in. If that happens to be lower than all the other expenses and that plus that down payment, then that would be the limiter in that year. So that question comes our way quite a bit. And some people ask, well, how do I know that number? That's a great question. It's a number that probably needs to be checked on periodically. We all know that rental values change over time, housing values change over time. And so oftentimes some people use tools like Zillow and other market sites like that to get a good idea. But one of the best ways might be just a good, trusted real estate agent in the area that you keep a good relationship with. They often don't mind giving you an idea of what this would be, because they know that if they keep a good relationship with you, you may refer them to others, or you may sell that home someday. And so just reaching out to a good, trusted real estate agent in the church to say, hey, I need to know what this would be. And then do that periodically. Is it every year? I don't know that that's necessary, but periodically would be a good idea there. So those are our limits. And that really brings us to the end of the details of the housing allowance discussion here. There may be some questions you have, and we're going to have some time at the end for questions as well. But this resource right here, guidestone.org/ministerial resources, has a lot of great information for you as a minister, one of which is housing allowance. There's a video on there. There's a couple of downloads available to you there. And so Lloyda may be sending this link out afterwards, and also that housing allowance question and answer document. So Rodney, I will pause there, turn it back over to you.
Art, thank you so much. That was a great summarization of the ministerial housing allowance. And just before we move into the next section, we'd be happy to entertain just a couple questions on this particular topic before we move to the next. Are there any particular questions out there that you all want to ask right now before we move to the next section?
I do real quick.
Go right ahead, Martin.
So I'm not a W-2 employee. I'm a 1099. And I've had issues with this, even with my retirement plan with Guidestone. I believe I need to be a W-2 employee.
That's a great question. W-2 employees, we're not tax advisors here, but as best we understand it, the minister truly is an employee of the church. The church directs his work, provides the facility, all those things, if you look at the test of what it means to be an employee or not. And so it is recommended that the church pay with a W-2. Recently, as long as the person is acting as an employee, and if the IRS would judge them as an employee, even if the church hasn't gotten the right form right yet, they can actually be a part of a retirement plan at Guidestone. So that hurdle is gone. But as far as ministers for tax purposes, the IRS, as best we know, is going to look at you as a W-2 employee.
Okay, then I'm going to have to look into that. Thank you.
Yes, sir.
Art, there's a question in the chat. Daniel says, I have heard that second homes could also be claimed under the housing allowance, including RVs. Can you speak to this?
I don't believe so. I believe it's answered in that Q&A document that it is the minister's primary residence, so where you live. I believe I'm right on that. I'm just going to stop it at 98% on that. But if you think about it, it's the idea of the assistance for the pastor for their shelter for their primary residence, and so that gets back to the heart and the purpose of the government allowing this to take place. And so I don't believe that's right, that it could be just for the primary residence of the pastor.
Cool. I'm going to ask you one question I get a lot as well before we move on. is you emphasized not to underestimate the housing
Yeah.
allowance, and that is so critical. What is the risk of overestimating?
There's in my view, there's very little risk of overestimating because you do settle up at the end of the year when you, or the beginning of the next year when you file your taxes for the prior year. Um, so you're still going to pay what's owed. You're going to have to use the lesser of the three if you're being honest about it, right? So there's no risk of underpaying there if you do it right, but there is a risk of under withholding, and I guess that might be the thing I would call out. Meaning, I'm my income. If we go back to that example, what was it, $45,000, and the housing allowance estimate there was 20,000. So the minister kind of knew that his tax burden was going to be X. Well, if he raised that to $30,000, thinking he might do a big remodel that year on the house and then didn't do it, he might be inclined to withhold a little bit less through the year, thinking that his tax burden was going to be lower by the end of the year. And so he might end up having just a big surprise of having to have a larger outlay of cash to pay the taxes at one time. I think that's probably the biggest risk, but I don't know of any audit or risk of the IRS frowning on that. I can't think of a reason they would.
That's how it's been explained to me as well. Great job. And there'll be more time at the end for other questions that may develop. So if we could progress to the next slide.
Yes.
All right. And go one more, please. Excellent. Okay, in this next section, we're going to continue to talk. This continues to relate to housing allowance because here at Converge, we're very fortunate to have a plan that would allow us to receive our retirement benefits and have a designated ministerial housing allowance as well. So pay attention to what's about to be presented because this can affect your housing allowance as well, your benefit as well. As many of you know, we do have a retirement plan. We have had a retirement plan here at Converge since 1967. We often refer to our plan as one plan, but it's really two plans. It's a defined benefit plan, which is better known as a pension plan, and it's a 403B plan, which is much like a 401k plan. So they're two wonderful opportunities. Within our plans now, we have approximately 400 participating churches and over 3,000 active and inactive and retired employee participants. The total assets of the plans right now are over $300 million. So quite a large plan here. So in this next section, Curtis is going to take us through some of the guidestone benefits of this plan. And Curtis, take it away.
Thanks, Rodney. Appreciate that. So it's great to be with everybody. And Art, great job covering the benefits of housing allowance. I know I learned a lot today. And so that was it's really good information. So as Rodney mentioned, we've been blessed, I would say, to steward. Art and I often use the word steward in what we say about this retirement plan. We've been blessed to steward the Converge Retirement Plan for the last couple of years, since the beginning of 2024, I believe it was. And as Art mentioned, there's a couple of different plans here. I'll have you go ahead and move forward, Art, on that slide. We'll talk about the two different plans and the basics of those. We'll talk about how to get started in the plans if you're not involved in the plans right now. We'll give you kind of a good feel for both options and then talk about what those next steps look like. So as Rodney mentioned, the Converge Pension Plan is a defined benefit pension plan. So the idea of this plan is if I like the idea of having an income stream set up for me at retirement that I can make withdrawals out and I can get payments paid to me over my lifetime, whether that's just for my lifetime or mine and my spouse's lifetime. There's different types of benefits that you can allow elect when you retire based on either just yourself or a joint life benefit. And this is the type of plan that a pension plan is, as opposed to what we'll talk about, the 403b, which is designed to be building a large account for you to control the withdrawal from. So this is all set up through the church, and the church is the one making the contribution on the pension plan. So this is not any that the pastor or staff person would be contributing to. And you'll see in the bold there's a range of contribution levels, anywhere from 3% of total pay to 6% of total pay of the participant that's going in every month into this plan. So that's the minimum and the maximum. So if your church is wanting to do more than that, then that's where we'll utilize the 403b as supplementing this. But this is really designed as a lifetime income vehicle for the pastor as example. So now that statement about vesting, so 100% vesting means that no matter how long you are with the church, if you've there's no amount of time that you have to be employed with the church to be able to receive this benefit at retirement. All of those contributions that are going in are going right into you have 100% ownership on that benefit, if you will. And as I mentioned, those distribution options can be just for your lifetime, or you can take a distribution that's for your lifetime and then a percentage towards a spouse if you passed away first. And then as it relates to what Art was talking about with both plans, you're able to claim some within those IRS limits, housing allowance on those distributions as they're coming to you in retirement. In addition, I guess the last piece I'd talk about with this is there are death and disability provisions within the plan. And so that's something that's really important to know, because you get a question of, okay, well, if my church is making all these contributions and I'm not reached retirement age, but I pass away, will my spouse be taken care of with this plan? And the answer is yes. There are death provisions. What if you become fully disabled? There are disability provisions for early withdrawal as well. So those exist within the plan as protections for you as a participating as a participant within the Converge Retirement Plan, the pension plan. Moving on to the next, we're talking about. We'll go to the next slide. Yes, the 403b defined contribution plan. Notice we call the pension defined benefit plan, meaning we know we're going to have a benefit stated to us at the end. Whereas the 403b plan is a defined contribution plan. All we know is we know what contributions are going in. We don't know what that benefit's going to be at the end, because we're building that nest egg that we're going to control the withdrawals from. And in the 403b plan, these are employer and employee contributions that are allowed. Now, with Converge requires that employer contributions to the retirement plan be at least 3%. And the employer can make those in the pension plan, or if they're not participating in the pension plan, they can make that 3% within the 403b. It's not required that you make them in both, but if a church is participating in the pension plan, then they would have to do at least 3% of the pension plan, and then they could do some into the 403b, or they could just make the 403 available for the employee to make contributions into out of their own pay. So that's what that statement is saying there. Is requires at least a 3% employer contribution if you're not participating in the pension plan. If you are, then that satisfies that employer contribution amount. And yes, they may be more than 3% minimum. And just like the pension plan, any church money that's going in is 100% owned by the participant, by the pastor, by the staff member. There's no vesting schedule. So if the pastor is only there a couple of years, they still keep those employer contributions with them. And of course, employee contributions are always theirs. And then as far as when you start taking money out of this account, also eligible for housing allowance within those IRS limits. But that distribution, you can do a lump sum distribution, which in generally most do not because of that housing allowance benefit. They want to make sure that they're taking those dollars out on a systematic basis so they're able to claim that housing allowance every year. And this is something we try to press upon all of our participants. It's not just that we want to keep your money at Guidestone, but if you have that money and you've built up this nest egg, retirement nest egg, the thing you don't want to do as a minister is roll that to an IRA because maybe an advisor who's not as familiar with housing allowance that says, "Hey, Pastor," I always call it the advisor in the pew, very well-meaning, and they love their pastor and they want to help them. And Pastor, I'm going to help you, and I'm going to do this for a reduced fee or whatever it may be. Let me manage your money, and they roll that to their IRA. Well, they've rolled it out of that 403b system, that 403b plan, that shell that allows the housing allowance, and then they're no longer able to take that housing allowance benefit as they're making those systematic withdrawals. So you want to make sure that you're utilizing the housing allowance, utilizing that 403b plan, even in retirement. And then as we mentioned, this would allow employee contributions as well as church contributions. And those can be tax sheltered contributions, generally are for ministers because of the housing allowance piece. But you also can make after tax or Roth contributions. And we're going to talk about that next in this contribution options section. So the first type of contribution that can be made is, like I said, employee contributions. So you can set aside a portion of your paycheck towards that 403b plan, that defined contribution plan. But the employer can make contributions as well. And it says at least 3% of a participant's contribution. And again, I'll go back to that rule of it's 3% in total, does not have to be 3% in the pension plus 3% in the 403b. It's a minimum 3%. And if you're participating in the pension, it has to go in the pension. If you're not doing the pension plan, then you can do that 3% in the 403b. But you can also combine and centralize assets from other retirement accounts. So we'll talk about that in a bit into the 403b plan. So if you have, maybe you've earned money, what we call an exercise of ministry in another plan, but you want to consolidate that into the 403b to make sure you have that in maybe in a housing allowance eligible account. Maybe you had a 403b at a former church, you rolled that into an IRA, and you're like, man, I need to roll that back into a 403b. So that's we see rollovers all the time into these plans. Moving forward here to the next slide, let's talk about tax sheltered contributions. Obviously, thinking about Art's example of the fully vocational pastor and ways that they're lowering their federal income tax. If you're making contributions into 403b, those are going in generally pre-tax, lowering your total taxable income. For most of us, including myself, when I start taking those distributions, I'm not a minister, those distributions will be taxable, whatever my rate is, at retirement. The idea being maybe I'll be in a lower tax bracket. Now, how much can I contribute? In 26, that we got an extra $1,000 added to that limit, and now I can contribute up to $24,500. Or if you're over 50 like myself, I just crossed that threshold a year or so ago. I can do an additional $8,000. So as long as I'm making $32,500 in income, I can defer that much out of my pay into the 403b account. Now, if I get to age 73 and I'm no longer working for the church, I'm no longer employed, the IRS is going to make me start taking money out of that account at age 73. Now, if I'm still working, I'm still actively employed by the sponsoring employer, by the church, that I can defer those what we call required minimum distributions, or we call them RMDs. You'll hear that, see that acronym in a further slide. But I can delay those if I am still working for the church. But the idea of this strategy of the tax sheltered is I expect to be in a lower tax bracket during retirement because I'm living off other forms of income, not income from my pay from the church. And maybe this is right for me because I need more take-home pay now, even if it means paying taxes on distributions in retirement. Now, you'll see in the next slide, if I'm a minister, then I get this reduction of taxable income in the year of the contribution and defer all that taxation on that contribution and all the earnings that it makes. Those contributions are exempt from SECA, so it's reducing my self-employment tax. So that's a benefit right there to do that, to do the tax sheltered contributions. And I'm getting tax-free housing allowance in retirement. So within those IRS limits, I'm taking money out. I'm able to claim housing allowance on the portion that's eligible for that. So that for that reason, we see ministers in general doing those tax sheltered contributions. Now, another option though is the Roth contribution. And that's on the next slide here. So Roth contributions, those contributions are after-tax contributions. So they're not reducing my income for federal or SECA purposes. But when I retire, and here's the catch in this, as long as it's been at least 5 years since I started making Roth contributions to the plan, if it's 5 years later, at least from the first contribution, then all of those Roth contributions are eligible to be tax-free upon distribution. Again, the same limits, and then that's total limits, whether I'm making pre-tax, Roth, both. But my total limit is that 24,500 plus the 8,000 if I'm over 50. I can even do a little bit more. There's an extra catch-up that's not on here. That's a few thousand more if if in my early 60s. I believe it's 61 to 63, somewhere in that neighborhood. But Roth, because I've already paid the taxes, at age 73, they're not going to make me start taking out those Roth contributions because they've already been paid. They're not going to the IRS doesn't care if I leave it in the account because they're not getting any money from that, right? So they're fine for me to leave it in that account. I don't have to make those withdrawals, those required minimum distributions at age 73 like I do with pre-tax money. So if I expect I might be in a higher tax bracket during retirement, or I'm okay with where I am from a taxable situation now, and I would really like that tax-free income at retirement, I could be doing Roth. Now, I know, and maybe Art can speak to this as well. We've seen ministers that do a little bit of both. That they work with a tax advisor on, hey, how much should I be putting away pre-tax? How much should I be putting away Roth? So that way I can take full advantage of housing allowance to get some tax-free income from my pre-tax contributions. But then I do a little bit of Roth as well. And then when I get to retirement, those Roth contributions are also tax-free. And they're really setting up a way to get a large amount of tax-free income, a large portion of this as tax-free income in retirement. So, all right, let's go ahead and move forward and talk about the last type of contribution, and that's consolidation. And we have a special landing page specifically talking about rollovers. You're welcome to go there. And on that, you'll see that guidestone.org/consolidate. There'll be a link on there for our phone number. You can talk to somebody about doing a rollover or even schedule a call with somebody from our rollover team. But the idea is, hey, let me centralize everything and keep everything together. And then when I'm making a withdrawal, I've got everything in one place. And then if you're, it says potential reduction in fees. This is probably a good time to bring up the fact that the Converge Retirement Plan, the 403B plan, has some of the lowest fee structure I've seen in retirement plans anywhere. There's no cost for the church to participate in this plan, and the amount of maintenance fees within the plan for participants that come out of the account is minuscule. So it's a really, really highly efficient, low-cost plan. And so you may say, hey, I'm paying fees in all these other places. Let's consolidate to one place. I'll go through these next slides pretty quickly because I know we want to leave some time at the end for questions. But when you talk about saving strategies in general, one of the things that we talk about to all our participants is if you're building a retirement nest egg, we've got some calculators that you can use to calculate, like, am I on track? Am I going to make it based on projections? But a good rule of thumb is to be saving at least 15% towards towards your retirement, and that's a total of the church and employee contribution. So, they have that old adage: the best time to plant a tree was 20 years ago, or whatever that is, and the second best time is today. So, at least starting somewhere is good. If you haven't started, getting started is great. But if you can save 15% over your lifetime, you're going to be in great shape. As far as the investment piece, there's a couple of different ways that you can do this within the Converge Retirement Plan. And this is really based around the dozens of mutual fund options that you have within the plan. Converge has done a great job. The Converge Retirement Plan, the Pension Committee, has done a great job selecting investments for this plan. There's a plethora of Guidestone funds, what we would call our institutional mutual funds. So their internal expenses are super low and make them super efficient. But in addition to the Guidestone funds, they've also added a few Fidelity funds. And if you're familiar with, I kind of compare them to Vanguard's funds in that their internal expenses are some of the lowest in the industry. So again, Converge is giving you investment options that are great performance and super low internal expenses, so more of your dollars are working for you. But you can have within the plan, your options can look like, maybe you select one of the I call it one-stop shopping type investments, where you could have your money in a target date fund, where perhaps you're in a fund, and this is what the money would default to if you don't make any choices. It's going to go in a target date fund. If you just enroll in the plan, start putting money in, it goes to a target date fund. For myself, like I said, I've just crossed 50, so I've got 15 to 20 years retirement. For me, probably 20. I'll probably work till I'm 70. So I am in the 2045 fund, because that's the most appropriate for me towards my retirement age. Or maybe I want to buy a target risk fund and just buy the conservative fund, or I buy the aggressive fund, or somewhere there in between. And I let the managers of those funds allocate my assets appropriately across all the different industries and on the different sectors, if you will, and different asset classes, we would call it, that are appropriate for me. The alternative to that is maybe I'm going to build building blocks. This is on the next slide here, that I'm going to do it myself. And I'm going to take all the other funds that are available to me, including those Fidelity funds, and build myself my own portfolio based on my needs and customize it, because I have maybe the time to do it, the discipline to rebalance and manage this, and the knowledge and know-how to make this work for me. So those are kind of your two options, and you'll see that within the mutual fund lineup that's available to you within the 403(b) plan. So moving forward, another option that you have always with Guidestone, and if you have a Guidestone account, I would encourage you, if you go onto the app, if you go onto the desktop, you'll see right there on the homepage, no matter which way you access your account, a link to schedule an appointment with a retirement consultant. And that retirement consultant will meet with you for free. You can schedule an hour account review. It's complimentary to go through and learn, hey, am I in an appropriate investment, or should I be looking at other things? How close am I to being ready for retirement? Do I need to be saving more? Do I need to be investing more aggressively? So you can talk to somebody about your account anytime. You can schedule that appointment. That's a great team. Next, we'll talk about, really briefly, next steps. If you're not involved in the retirement plan, there's an online employer form that we'll have you fill out. And then once that's filled out, we get an account set up for you in either of the plans, and you're a participant. You as pastor or staff member would complete the enrollment application, return it to the church, and then once you're enrolled, you go into your My Guidestone account and add your beneficiary or beneficiaries. And that's the general process. But really what you should remember is this landing page, guidestone.org/converge. You'll also see my contact information later. So if your church is not involved in either of these plans and is interested in getting started in the Converge Retirement Plan, either go to the landing page, or you're going to go to my contact information here in a bit and reach out to me because that's my role is helping churches get started within these plans. So you can learn more about the plans at guidestone.org/converge. One of the things you'll find is as an employer, we've set up well for employee and employer. As a member, you're going to have access to my Guidestone. You're going to be able to see your balance. You're going to be able to see who you've designated as beneficiary. You're going to be able to change your investments. And then your administrator, let's say it's your treasurer or somebody like that at your church that's handling the plan from the church level, is going to have access through our portal. I call it a portal. We call it EAP, the Employer Access Program. No software needed loaded onto your church computer or anything like that. It's an online portal that your admin can log into and make those contributions, download plan level documentation, get so all kinds of resources and reports through that. So it's a great employer portal that they're going to have access to. And then we mentioned the My Guidestone dashboard that you're going to have access to already, but it's a really great tool. And again, you can use that on the app. You can use that on the desktop, and on both of those, you're going to have fully access to your account, but also have that link to be able to schedule an appointment with one of our retirement consultants. Now, who do I contact? Who do I get more information from about this? I mentioned to get started in the plan. You can set up the plan, enroll. You're going to reach out to me. That's my number. That's my email. And in fact, all of us at Guidestone have the same email formula. It's firstname.lastname@guidestone.org. So if you forget to the email address, but you remember my name, curtis.farmer@guidestone.org, reach out to me that way. Or there's my number, 214-720-4791, if you want to reach out to me directly. But if you're already a member and you just want to reach out to Guidestone and have general account questions, you need to reach out to somebody. The 88898 guide is an easy to remember website. We also have a dedicated email for converge@guidestone.org, so you can reach out to us that way to ask your questions, and somebody will get back to you. And then finally, like we said, the customized landing page is got some detailed information about the plan. You can go back to there, and that's also got a link to schedule time with me to talk about the setting up the plan if your church is not yet involved with the plan. So with that, I'll turn it back to Rodney, see if he has any closing thoughts, and then we'll open it up for some questions.
Great job, Curtis. Great job covering the plans. You did it so well. We do have some questions that have been dropped into the chat. Well, then we'll go through those first. And if anybody wants to ask any questions, we'll take those as well. First question is from Chris. I have some personal investments, but never did anything through Converge. At age 50, is it too late to get into the Converge Retirement Plan? If yes, which one?
That's a great question, Chris. Thanks for that. Never too late to get enrolled as long as you're employed by an eligible Converge church and your church adopts the plan. If you're talking about bringing in personal tax sheltered investments and rolling them into the Converge Retirement Plan, that would be done within the 403B vehicle. But if you are just wanting to get started and started saving, really either plan would be appropriate for you. It just depends on how you want to set up that benefit at the end. If you're attracted to the idea of having that lifetime income, or if you are wanting to build up that nest egg. I would say, Rodney, you can correct me if I'm wrong. I would say a lot of folks who join post 50, I would say a lot of them do join the 403B because they feel like they want to be maybe a little bit more aggressive in how they set that up. But I don't think the pension is really excluded from that either, because within that 10 years, you're at least going to be able to set up some supplemental income with that. So that's kind of my thoughts on it. Rodney, do you have anything you want to add on that? Or Art?
As Art said earlier, we're not experts on this, but I do see one of the big benefits of the pension plan is the lifetime income. The
Right.
biggest concern I hear is people are concerned they're going to outlive their money. And knowing with that
Yeah.
pension plan, the longer you're in the plan, you're developing that benefit that's going to be there for your life. And depending upon how you take it, could be for you and the life of your spouse.
Yeah. I see on the next question, is there a place where we can see average rates of return for Guidestone funds? I will tell you what I'm going to do is I'm pulling up a link right now. We can move to the next question. I'll post a link to the performance page for the 403B plan. I'm getting to it right now. And once I
Sure.
get that link, I will post that link in the chat. And that is updated regularly. So that's going to continually update, and it's going to show you annualized returns over a 3, 5, 10-year basis, those kind of things. And so just pulling up that website now, and I'll post that in the chat for you there, Daniel. Thanks for that question. That's a great question.
Excellent. Next question is from Ed. If I am not under Converge, can I still participate in this retirement plan? It goes on to say, can I also enroll with Guidestone even if I'm not with Converge? So to participate in the Converge retirement plans, you have to be within a Converge church participating in the plan. So there are situations where you may have started with a Converge church and joined the plan and then left, and you can continue to participate. But initially, you have to be within a Converge church to participate. Curtis, you want to address the Guidestone piece? Can I also enroll?
So we do, obviously we serve churches beyond Converge. In fact, our history, Guidestone's been around for more than 100 years, originally founded by the Sunday School Board of the Southern Baptist Convention. So it's an organization that serves not just Converge, but many other, I would call it like-minded or shared values churches, as well as other denominations. So maybe you're an independent church, but you come to Guidestone looking for a retirement plan. Now, I will say it's not going to be as cost effective as the Converge plan, because as Rodney said, when you have, what was that number, 300 million in assets, there's some preferred pricing that comes with that. That's just the facts of life there when you think about the efficiency of that. And but it's still going to be very cost competitive. And we try to make these plans as cost competitive as we can for those that want to utilize the faith-based investing that's found within the Guidestone funds and the Guidestone retirement plans. So if you're interested in that for your church, we can take a look at what that looks like for you from a cost perspective. Your mutual fund lineup within your retirement plan would be similar to what the Converge plan is, maybe with not those fidelity funds and with the standard, just the standard Guidestone lineup. But you're going to have a great variety of funds within that. And really to be eligible to come to Guidestone as a church outside the Converge plan, there would be basically four different questions we would go through to make sure that there's those shared values and shared belief systems, kind of really around authority of Scripture, salvation through Jesus, and some life and family questions, because our investments, we didn't talk about this earlier, but our investments are going to exclude some things that conflict with our biblical values, whether that's companies that make their money off of abortion or the gaming industry or adult entertainment, things like that. So there's some things that we just want to make sure that there's alignment there, and then we can talk to you about that. But I'm sure that's something that we can have a discussion about, and feel free to reach out if you're interested in that.
I see we've reached the end of our hour. I want to thank everybody for participating today, for logging in. I want to thank particularly Art and Curtis for sharing all the knowledge and the slides they've shared. Lloyd will make sure this is available to anyone. Is there one last burning question out there someone wants to ask before we sign off? Okay, hearing them. Thank everyone. Have a wonderful day. Have a good day, Art.
Take care.
Thank you, guys.
Bye-bye.
Appreciate the time. Thanks, everybody.
Enjoyed it.
Thank you, guys.
Thank you.